Welcome to the 2022 Economic Depression and Preparation channel. Host Saying, thank you for joining me once again on this July 2nd, 2022 edition. We just want to briefly touch on some things. I want you please to subscribe to this channel, tell your friends and neighbors and everyone, cohorts, to subscribe to this channel for the latest in financial news. And also, we want to welcome you to we started a new YouTube membership program as well. If you want to become a monthly member, where I personally answer your questions face to face on YouTube, personal questions, then join. The membership information is available. YouTube membership information is available. Please leave in the comments or join or sign up, and we'll appreciate your support. In the meantime, guys, we're going to be talking about this housing market crash as well as inflation heating up in other countries and lowering demand for services and goods in the United States, as you can see. So we're going to get right into it. There's a storm brewing on the horizon. As you look out the window, you can see this storm coming. We don't want you to be caught unawares and unprepared for the storm that is arising in the American financial institution. So, according to Fortune.com, a closer look at the 40 housing markets at risk of losing 15 to 20% price decline. Now, guys, many people indulge in the frenzy. We will never again see rates this low, guys. We will never again see mortgage rates around 2%. 1.5, 2.5%, even 3%. We won't see mortgage rates again that low for the next 10 to 15 years. It was obviously a great deal for those who took advantage of it and bought houses and condos and townhomes and properties, land during that time. Now we're moving into a different transition phase, as you're aware of. And a lot of these markets like Las Vegas, Phoenix, DC, Miami, Tampa, Atlanta, Charlotte, all those areas that were, even some areas in the Pacific Northwest, like Idaho, people moving up to Salt Lake. These areas, as Californians were fleeing, these areas are overvalued already at the normal price levels, as we know. And now they could be seeing a 15 to 20% reduction in prices, but this is going to happen later on. This is going to take longer because this bubble was actually fueled not by bad loans and subprime loans like it was in 2008. This housing bubble was fueled by 0% interest rates, cheap money printing, and a whole lot of speculation. And so a house that was selling in Omaha, Nebraska for, let's say, $150K 5 years ago is now selling for over $450K. So it's just exploding values, and it's just not sustainable. We love the equity in our houses, we love it, but the value of this is unsustainable. And so this is what's going to happen, guys. So if you can afford to hold out on buying a house, this year, I'm not a financial planner, but if you can afford to hold out though until later on in the winter is coming, as they say in Game of Thrones. Winter is coming. If you can afford to hold out to after the election season, say Thanksgiving to Christmas, around that time is when you might want to think about. And if you can afford it, go with mortgage rates that are at 6% now. It did decline a little bit, but they're still high. So just think about that. Now, Pakistan's June inflation surges to 21.3%. This is the highest in over a decade. Their inflation continues to spike as fuel prices have risen about 90%. So fuel prices have risen overseas in India and Pakistan. It's the same here. Guys, our inflation is approaching double digits, 10%. It will be at 10% by the end of this month, 11% possibly. The official numbers. We're already at 20% unofficially, according to shadowstats.com, but the quote-unquote official numbers have us at 10% and above, okay? So we had that there. Pakistan's Consumer Price Index, they use the same thing. It rose 21% in June from a year earlier. Same here, the same deal in the States, the same deal in Europe, the same deal in Australia, the same deal in Japan. Hey, it's going worldwide, baby. This inflation is going worldwide. Hyperinflation is going worldwide. So, guys, this is going to create a problem because this is all about resources and everything. As you know, the Wall Street Journal is reporting cooling demand for goods threatens to turn pandemic boom into bust. There we go. At the beginning, everything was booming. They had all the stock market booming. Everything is booming. Now, the demand is cooling off because the discretionary income for all of Americans is dropping. Savings is starting to get dwindled. everything is going up. Taxes, property taxes are going up in a lot of states. Municipal city taxes, township taxes are going up. Services are going down because a lot of these cities, township, municipalities, parishes are short staffed with workers who don't want to come in because they say it's not worth it to drive all these miles, an hour commute or whatever, or 30 minutes or 2 hours commute. And I don't have it's not worth it, the money to pay in gas and food and transportation and all these costs. It's not worth it. I'm not getting a raise. The average American has not received a real living wage in over 25 years. Okay, so that shows you that something is very, very wrong in our system, in our economy. And you have to remember, the U.S. economy is $13 trillion on any given day. It's the world's largest economy. So it takes time for these numbers to come down. It takes time for the system to come down. But it's clear now to the rest of the world that we are entering a recession. The rest of the world is already in a recession. And the United States is just the last domino to fall into a recession. And so that will become clear after this summer. And this is not counting any black swan events that we may have. So the demand for goods and services is dropping. Factory and manufacturing production is dropping, as I said in previous videos, guys. And so here we are again with the cooling consumption. As you can see, the US, UK, Eurozone, you can see reduction is flatlining here in 2022. This is a retail sales, index of retail sales, okay? It is flatlining here, beginning to flatline here. So demand is weakening. This is the perfect storm. We have weak demand, oversupply of goods and services just sitting in warehouses and who knows where else, and we're sending billions and billions of dollars overseas to Ukraine and other countries to fight other wars and other problems that's going on. This is the perfect storm. And so what we're going to end up having is a stagflation to hyperinflation, and then a massive deflation as people can't afford to buy the goods and services, electric cars and everything anything's going to go on. This is all going to happen within the next 2 to 3 to 4 years of the American economy. So get prepared. Stay prepared, guys. Don't be dissuaded by what you hear on the news. There is hope. If we continue to pray, God's going to help us out physically, spiritually, mentally, and emotionally. Continue to prepare food, water, security, medicine, prayer, scripture books. Those things are what you need. Those are going to be golden. Those are going to be barterable materials that you're going to need for when this dollar currency goes up in smoke because of hyperinflation and everything that's going to be going on. And this is worldwide. Everybody's going to need this worldwide, because now it's going to transition in this technological economy that's being replaced by technocrats, automation, and all that. It's going to transition from that to a resources demand economy, meaning the resources are going to become more important. That food, water, security is going to be more important than gold, silver, and crypto, at least in the initial. The cryptos and the gold and silver that people talk about, that's for well after the collapse. That's for when things, people are not going to eat a bar of gold or do all that, so or use it for security. So think about those things. Let me know what you think in the comments below. I'll talk to you very soon. Have a great 4th of July weekend, and I'll talk to you very soon. Thank you.